Our next speaker is Brad Yasar, Managing Partner at KrowdMentor. Brad is an entrepreneur, investor, mentor, and advisor who has started and bootstrapped several companies from inception to maturity over the past 20 years. Brad is currently the co-founder and managing partner of KrowdMentor, a strategic crowdfunding advisory firm focusing on ICOs, cryptocurrencies, blockchain, and token-powered organizations. Brad.
Hello, everyone. My name is Brad Yasar, and I'm the managing partner of KrowdMentor. I'm here today because I know a lot of people are wondering what's going on with the investments in ICOs and crypto assets, and just investments in general in this asset class. And I do want to talk a little bit about how we got here and what I've seen has been working so far in 2018. Again, my name is Brad. For those who don't know me, I've been involved with blockchain from the earlier days, both as an investor but an entrepreneur. And I'm very excited about what's happening and what we've accomplished so far in the blockchain space, all the way from Bitcoin to newer generation blockchains like EOS and others. Why am I here is as a part of what we do with KrowdMentor and Blockchain Investors Consortium, as well as D10E, I have the pleasure of looking at hundreds and hundreds of white papers and pitch decks every month. So I get a good feel of what's available and talk to other fellow investors and entrepreneurs on what's exciting to build. KrowdMentor is a strategic advisory firm. We have helped a lot of entrepreneurs and funds successfully get into the blockchain space. They have invested in quite a few projects, but KrowdMentor's portfolio right now is around 50. So the evolution of crypto investing. The investors in the crypto space have evolved and changed a lot in the past 4 or 5 years. The ICOs, or initial coin offerings, and token generation events has sped up this process a lot. But even before that, there was some investment that was happening and increasing exponentially in the early years. As of January 2014, there is almost $15 billion invested in crypto assets in the past 4 years. I like this visual just to give you an idea of how many projects have popped up, because when we look at $14–15 billion, one doesn't get a good sense of how many projects that entails. And I had a video here, but I guess it's not there anymore. This is actually the final image of a video that shows the velocity of projects that are coming online in the crypto space. And the most important thing happens around summer of 2017, when we go from a few dozen projects in the crypto space to thousands of them. No video, so that's fine. Early investors in crypto. So who were the early investors in crypto? The early investors in crypto were technologists. These were people who believed in the projects they were participated in, and they also understood the potential impact of the technology in our societies. So their investment philosophy was not ROI, return, or profit-driven. Of course, everyone likes to make a profit, but it was more driven through alignment of mission, vision, and goals. How many of you here are currently fundraising? Let's see a show of hands. 1, 2. Okay, maybe a dozen people. And how many are investors? Good, we have more investors than people raising funds. Well, you probably are not this type of investor if you're investing today, because with the invention of ICOs, TGs, and other crowd sales, initial offerings, What happened was the investors in the crypto space moved from purely technology background people to angel investors and VCs. And this happened because the investors, the early investors, the early holders of Bitcoin and Ethereum started seeing a lot of wealth generation and started diversifying. Once those people started diversifying and the information about how valuable crypto assets could be came about, people realized that they wanted the exposure to crypto investing. And these people, again, were angel investors, VCs, private equity people who understood high-risk, high-return investments because, as you might have heard before, it's a saying that 1 out of 10 investment for a VC is going to pan out, and you don't even know what it's going to return. So that was last year. 2016-17 were the years of ICOs and early-stage investors. What's happening this year is we're seeing a lot of interest from institutional investors. And you're going to say, what's the difference between a VC and an institutional investor? Although the line may not be very clearly drawn for some people, the risk tolerance of institutional investors is much lower than the early-stage private equity investors. So it's important to note that the investors coming into the space and writing the large checks this year are going to look at different criteria to invest in your projects. Just to give you an example, in the traditional investment space, of course, ownership is very important. So the new wave of investors are looking for deals where they can have ownership. They want some equity in your projects. And the early model of nonprofit foundation issuing tokens, such in the case of Ethereum, is not as interesting to these people as it was 3-4 years ago when Ethereum launched, and the people who participated were not family offices. They weren't institutional investors. They didn't have mandates from their limited partners to actually have equity in the projects. So they're funding different types of projects. Early stage, again, it was more blockchain infrastructure. Then we moved to platform, protocol, and some distributed apps. But these people are looking for different types of projects. So again, if you're planning a new ICO for your company, you may want to think about how you're going to use the blockchain technology, how you're going to incorporate it in your business so that it becomes attractive to these investors. How do we raise money this year? What I've seen from both the deals I've personally been involved with and talking to other people is that the value proposition has to change. Last year, tokens and bonuses were the thing, depending on how early people got in. The higher the bonus, quicker the close of the investment. A lot of investors, both in the private equity space as well as institutional, are moving away from that. They want a better alignment through equity. So we're seeing a lot of deals still being done, because I get this question a lot too. People ask, well, are there any investors left? How do I get money into my ICO? Well, there's less interest right now in your token because of the failure rate of the ICOs from last year, and more interest in an equity partnership, especially for the early stage deals, the seed stage investments you want to take in. So what do? We start with product first approach, not the ICO strategy, and try to build a good team, good product. That way, whether they're traditional investors, crypto investors, or a combination, you increase your chances of getting funding. I want to make sure you think about your project as a business. Think in terms of business revenue model. Think more traditionally as opposed to constantly fundraising. Don't think about, I'm going to raise 50 million, and then I'm going to raise another 50 million because I can issue tokens, it's non-dilutive. Think about, how am I going to get to revenue? How am I going to get to profitability? And that's going to be your winning proposition and long-term value to your investors. Once again, my name is Brad. If you have any questions, you can find me outside, and I thank you for your time.